The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Okay, we're going to take a look at our first request today, which is the Wynn casinos. And as you can see, this is over the past 8 years. You'll see two major ABCD patterns there. You'll see the big one, of course, going up to the top, just about absolutely perfectly up around that 245 area. And then if you look at the area between 2008 and 2009, you'll see the big ABCD that was absolutely perfectly that came in late February, early March of 2009 when the rest of the market bottomed. Now this stock is highly correlated, as you can imagine, to the casinos in Macau, because that's where the big expansion for Wynn has taken place. So I guess they've had a lot of trouble with the gambling as far as Chinese coming in and telling folks when they can gamble and stuff. Instead of being every day, they can only come in twice a month or whatever the rules are. But the real key to this chart is because something that I think we might be seeing in the S&P and also in the stock markets in general on the indices, and that is you'll notice these bear markets, that this is a vicious bear market on the downtime. Anytime you go from 250 down to 50, that's a bear market. I mean, there's no question about it. But you'll notice that the rallies are very shallow, and they usually last only 3 to 5 days. So that's what you want to be watching, because I think we are in that scenario in the stock market for the U.S. and also for China and all the rest of the world too. We're in a vicious bear market. I don't see any reason to think that we're not. If you look at the steepness of the decline and the fact that the rallies have all been held by 382 retracements, you certainly have to respect that from a technical basis. So let's watch that as this unfolds. But right now it looks like there's no bottom right here, and yet in the Wynn it looks like we'll make a double bottom, probably lose another 50% on this stock down to about $20 a share. It doesn't seem to have any pattern down here that would give you a semblance of buying it, and that's for sure. Now, today, we have an interesting phenomenon occurring, and that is that the S&P 500 is making a 3-day. It's actually it bottomed on the 11th, so here we are into the 12th. So we're in the second day of the rally, and we are coming into a 382 retracement of the rally that we had back on January the 4th. That comes in at 1940, and so far today our high has been 1938, so that's very, very closely. This is important because as you see, every time this thing is rallied a little bit, it just literally gives it up very, very quickly. We've rallied 40 points off the bottom already, folks. I mean, our bottom was down there at 1892, so we've rallied 40 points off the bottom, which is a good sign. Now, if we can get it above 1940, then we've got a chance for a stronger rally that should last several more days. And that's what our index is saying, that we should have a pretty good bounce in this area. But folks, this thing is so bearish from a technical standpoint. There's nothing to do with the fundamentals or anything like that. Or the full moon or new moon or any of that stuff. It just has a technical picture of the rallies that are very, very quickly dissolved into more down selling, and that's the main thing. Remember that markets that open higher in bear markets have a tendency to go lower, just like markets that open lower in bull markets have a tendency to go higher. And part of that is called by the short covering that occurs, and then also the long buying when the market goes higher. So this is a critical day here that we have here in the markets, as near as I can tell, and we'll see, what's going on. I wanted to share with you some information that our good friend Shane Smolian sent me, and I wanted just to show you when we talked about the speed of those planets the other day. I'm doing my best to get him on the air, but he's become so darn busy running his hedge fund and stuff now that it's a little harder to get in touch with him. But this is basic. By the way, if you do want to reach him, it's wolftrader.net. And he probably send you some information, about what he's doing and stuff. He has some really good videos out there that he does send to people, so keep an eye on what he's doing. Anyway, you can see here that these aspects that we have, and this is similar to the aspect chart that we looked at, except this adds the speed of the planets and the inner planets, which are Mercury, Venus, Mars, and Jupiter. And when these planets slow down, these are the things that supposedly turns these cycles. And so far, it's been a pretty good indicator. Now, you notice here that this thing goes up into the 14th, which would be on Friday. 12, 13, 14. Yeah, but let's see, Tuesday, Wednesday, Thursday. No, that would be on Thursday. And so we would be looking at a potential for a market to have a 3 to 4 day rally in here and then come down hard into the 27th. That's what it looks like. And we'll see if that works. Now, this is just a technical indicator, folks, just like anything else. It's all based on probabilities. Sometimes they work, sometimes they don't. That's why you have to look at the patterns themselves, and we'll see what's going on. Yes, Mr. Z, Norm Winsky did give us some more great information about the bottom on the 11th. And, of course, when he was talking about the new moon scenario, and then when you add it to the other things that we're looking at, this is really, it's got some similarities of cycles, and that's really what we're looking at, folks. None of this is, there's nothing 100% out there. Believe me, there really isn't. All you got to do is just to try to, add the things together and get your best possible scenario, for things happening. Well, we've got one other one here that we really need to keep an eye on today. Oh, I wanted to show you the DAX also, because the DAX is in the same situation that we have with the S&P. We're getting ready to make a 382 retracement, and as you can see, you'll be looking back here at where we were just a few days ago, and so we're making a 50% retracement of the high from January the 8th, but we're at a 38% retracement of the high from January the 4th. Now, I've had a request to bring in the commodity markets from going back into the 30s, and what they've done as far as returns. And I wanted to just bring this up to let you see it, because there's some beautiful ABCD patterns on this chart, folks. I mean, everybody now knows what an ABCD pattern is. I mean, that's like saying, what is a rainbow? Anyway, it's probably the same scenario too. Anyway, if you'll notice back in the 30s, 1932, when the stock market bottomed, you'll see the market started a big ABCD rally that ended back in 1978. And then from the downside, you make another ABCD to where we are pretty much right now. So we've got a potential for some commodities to make bottoms here pretty soon. The only problem with this chart that I see is the fact that many things changed over that 80-year period. We had a lot of commodities that came into fruition that weren't there back in the 30s. Okay, we'll take a little break here. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, back, folks, and we've got several requests to talk about the gold, the silver, and the platinum. And I think this chart of the 30-minute gold chart over the past 3 weeks pretty much sums it up. You can see the strength that we had in the gold market. You know, we went exceedingly higher than the December highs, and yet the silver could not even take out the highs of December the 24th. So that was telling us that the market was a suspect at that point. Now, what we have going on in gold right now is that we have a Gartley pattern that is formed down here at the 1085 level. That's a 50% retracement. It's a perfect ABCD, $25 off the high, and so $27 off the high. So this is where gold needs to hold, is the 1085. Failure of that to hold drops it another $10 to $12 lower. And then, you know, we'll see from there. But look at silver, folks. Silver is already taking out the lows from December 31st. This is not a very good sign for the precious metals. And someone's asked about the copper. I'm not involved in the copper market, but we're trading under $2 a pound now. And it looks like that we are going to go lower. Still, you know, the market is basically all the commodities are still under a great deal of pressure, and there's really no reason to do this. The same thing is true as platinum. Oh my goodness, guess what, boys and girls? Santa has come back again just a month later. We have our good friend Charlie, Priceline Charlie from La Paz, Mexico. Charles, are you there?
Yes, I'm here. How are you, Larry?
We're good to hear your voice, buddy. What can we do for you?
I've placed a couple of positions at the 1240 level, the 200-day level on Priceline.
Mm-hmm.
And what do you think? Should I cover it, or should I still hold?
I think you should move those positions to my account to take care of any tax problems that you might have, Charlie. Listen, this thing looks like it wants to go a lot lower to me. There's a target there, Charlie, that we have a huge ABCD pattern, comes in at 1097. What I would do is I would be looking to cover down around that 1100 to 1097 level, but at this level you certainly don't want to give any of your profits back, so I would use a stop of around 1155 or something just to protect the profits. But there's a perfect ABCD in price line that comes in right at the 1090 per share level. But we're in a major bear market, Charlie, so if you want to ride this one, buddy, you can certainly do that. But you got to use some kind of a trailing stop here, because you know these markets can reverse quickly, and you certainly don't want to get hurt too bad.
So the number is 1155.
I would put a buy stop at 1155. That's $20, $19 from where it is right now, and let her rip, because if it gets below 1090, Charlie, you'll be looking at triple digits. You'll be looking at about 950 in price line. And remember, if I'm right, and this is a big bear market that has started, this thing could make that very easily, because we were just many years ago, way back in 2009. The 61% retracement on that, Charlie, comes in at 726. That's $700 or $400 from where it is right now. So there's a potential for that market to hit 700.
By the way, talking about back, I'm one of those people who put their money in 2000 in the internet stocks, and I'm not kidding you. I went from a couple of $100,000 to $8 million. Guess what happened?
You got out with a couple $100,000?
Yeah, you're right.
Yeah, I've been there, done that, Charlie. So that's not unusual. That doesn't even get you into the Guinness Book of Records, my friend. And the problem with that is that when money comes too easily, it just literally clouds your thinking, because you begin to think of money in terms of greed as opposed to what really money is, and that's money that you've earned or that you could have earned. And I've got so many stories of customers that I had when I was at Drexel that I saw that happening, and it was really truly amazing.
Talk about greed. I set my target. I thought reasonable about 300 million, but looked like it didn't work out.
I like your style, Charlie.
Thank you. Thanks for the help. I'll keep listening to your advice.
Thank you, and happy New Year to you. And be sure to call in and let us know how you're doing down there, okay?
Okay, you have a happy and healthy New Year, too.
Okay, you bet. I have to tell you a story, folks, about this, because when I quit the brokerage business in when I gave up my license, well, I never really gave them up, but I quit being a broker. But I was helping a brokerage firm out of San Luis Obispo. They didn't have a commodities department, so I hung my license there for a little bit and let people run some orders through there just to help my friend who was the manager of the office. And we had a young man came in, and he wanted to buy calls in silver when silver was like at $7. And I warned him of what the risks were and stuff. He was a carpenter, is what he did. So he bought his calls. They were like $2,500. He bought 2 of them for $5,000, and they were way out, or about 18 months out. And then we had a big run in silver back in 1986, and these calls went to almost $70,000. And I called him up when it was around 55 or 60, and I said, look, this is something you really ought to consider. I said, why don't we, if they get up to about 65,000, I said, John, all you have to do is sell them, and you've made 2 years of income, and you just don't have that happen. You could buy yourself a nice house or whatever. And so he came in, and silver was trading at about 60. Those calls were around $68,000, and he sold them. And he was quite happy. And then what happened the next day, there was an article about silver, China buying silver or something, and silver was due to be up about $3 or $4 more an ounce. And so he came in, and he wanted to rescind the order. And my friend, who was the manager of the office, John, he said, let's just resend it. And I said, John, and then I got to eat it. He said, no. He said, well, let the office eat it. He said, you know what'll happen. I said, yeah, I know. So we rescinded the order. He put the position back on for him. The next day, it was up about 20 cents. and he cashed out with $500. And with that was the last order that I ever put in the commodity markets for anybody else, and never again, as they said, or it was never before. What was that guy, Edgar Allan Poe? Never more, whatever it is. But anyway, remember, boy, greed is a good thing. And remember, the greatest signal that you can have, the 100% signal, is your telephone signal. And that is when you pick up the telephone or pick up the calculator to see how much money you're making. Pick up your little mouse first and get rid of all your positions, because that tells you that the market has reached the top. That's an indicator that Larry Williams told me about many years ago, and he said that was the most infallible indicator that you could possibly have, and that's pretty much correct, because when you figure out how much money you're making, it's a little too late in the old fear greed game. So be sure to protect yourself when you're doing this. Just do it on a stop and be realistic, folks. If it's not hard to, it is hard to, very few people double their money very often. In fact, one of the things we're going to talk about at the break is about George Soros and how he handles things. So we'll be right back to talk about Soros.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, the next chart we're going to look at is furnished by our good friend Jim Bartolioni, and this goes back from the British pound versus the U.S. dollar from 1972. That takes us back, 44 years ago. But the important thing to look at here is the 1992 area. You'll notice where we've got that marked where Soros went short the British pound when it was up around 2. And it went from 2 down to 140, and he made over $1 billion. He faded the Bank of England, and was right. But you'll notice that after he got out of that, the market had a rally and went back above those highs of 2007. But you never heard from him again. Now, whether he was selling again back in 2007, that we'll never know. But the guy's a pretty smart dude. And at that time, in 92, he still had Jimmy Rogers working for him, and he also had the great Stanley Druckenmiller. So he had a great deal of help, on some of this stuff. But that's what you're looking at. Now, if we look at what the pound is doing right now, you'll notice that the long-term trend line from 1985 that we hit in 2009, we are running against that again right now, and that's at the 144 level in the British pound. And so, as long as we can stay above 144, we've got a chance here, for the British pound to have somewhat of a rally. So we want to watch this one relatively closely, but this is a beautiful pattern. As you can see, from 1972 to 1985, we completed a huge ABCD pattern, and in the course of 1985 is when we had a change in some of the foreign exchange markets because of what was happening globally with Japan. And that's what caused some of these, big gyrations that we've seen. But Forex is a, really good market to trade because it has a tremendous amount of liquidity, great volatility, of course, and it really does work pretty well. Now, the next one that I wanted to bring to your attention here is the one on the someone's forwarded this to us from one of our listeners, and it's based on some cycles, and I just wanted to bring these up to show you. This is a chart that the gentleman did. If I can just get this to work right, and I think it will. Let's just click this over here. There we go. You'll be able to see it. This is the SPX, which is the cash, and you can see the larger cycles that are in there, and they come up pretty closely to what we're looking for as far as March. Let's try that again. May the 30th to 31st. That's going to be a very interesting time during that Memorial Day weekend. So we'll watch that with a great deal of interest. But this is just showing you the cycles that are there. The problem with these cycles, folks, is they shift. They either expand and contract because they're based on normal cycles, but normal cycles, I believe, are based on these planetary movements, and they're going back and forth, and they're speeding up and going down. And to find a really good spot just by comparing cycles from 1 or 2 cycle points is very, very difficult. You need a lot of samples in order to prove that the cycles work, because an 18-day cycle will probably work about twice, 18 and then 36, and then it'll shift out to 54 days. This is the problem that I had during the bull market of 1970 to 1974. If you bought every 18-day low, you made a fortune. But what happened after the market topped in 74, those 18-day cycles would only rally 2 or 3 days and then come down. And that's what we could be happening now in the S&P. That's why I'm trying to alert you to this really strong number up here at 1940 in the S&P. And so far, our high is the I'm thinking to myself, a very dangerous thing in my condition when you get older. But anyway, a lot of this stuff is, from Edward Dewey and the Foundation for the Study of Cycles, and someone who's taken cycles to a whole new level, of course, is Martin Armstrong. He's in a class, not by himself, but he's up there with guys like Bill Ehrman and a few other people that I've met through the years. In fact, Bill Ehrman, I think, stands up there with the gods, in my opinion, because some of the things he's looking at. Hey, and we cannot we don't want to put Norman Winsky in the God category, but he's given us 5 signals, folks, and all 5 of them have been spot on. So we are going to take up a collection for him sometime in the near future. So get your little purses ready, and we'll see if we can send him a few shekels. Okay. Let's take a look here at the British pound. Yeah. Norman's on fire. That's correct. He is. All right, we're going to look here at the British pound here because we have a really nice pattern. Whether it works or not, I'm not sure. But we've been down here now. I posted this about 3 hours ago when it was trading at 44.21. I'm not even sure where it is right now. But we've come down here and we've held this level at this 1.618. It's a 3 drive to a bottom pattern over the last 5 days. So this is a really important spot for where the thing should hold, and that's the bottom line of what we're looking at. So we got the markets opening now, and then we'll see what's happening. Just 1 second. I have to turn off my alert because wheat has just hit the 61% retracement level, and I wanted to know when that happened. And give me a second, and I'll turn that off. There we go. And there, that's turned off. Okay, the grains, I just don't think we're quite ready yet in the grains. I know we're getting close. But we've got some targets down here, about 30-40 cents lower in beans and about 10 or 15 cents lower in corn and 15 or 20 cents lower in the wheat market. I'm waiting for those. And with all the selling that we're having across the board in all the commodities, from copper to oil and everything else, there's no reason to try to, to buy early because it's just not ready yet. I'm sure all the rain that they've had across the Midwest is probably going to have some kind of a problem when in a few months when this planting season comes up, because it's going to be real interesting whether this is going to be a factor for the grains. But I just don't see the action in the grains that you get in some of the other financials that we're watching in the currencies, like the yen has had a tremendous move. We've had a pretty good move in the Australian dollar. And then also now we're getting ready for the Canadian dollar, because the Canadian dollar hit a major 1.618 expansion today, folks. This is one that was brought to us by our good friend Jimmy B. And I'll put this up and let us see it, because we hit that 142.50 last night. And so far it's backed off about 100 pips this morning. But we'll be able to see, what's going to happen here at this time. Regarding the weather, I'm sure you're aware, especially if you live in Chicago or the Midwest, they're in a major deep freeze out there. And that's going to be pretty tough when this ground thaws, where the water's going to go and, all of those things. But it's very, very cold across the upper Midwest. And we're starting to see that move into the East Coast now also. 1 second, please. Okay, back to the stock market. Take a little break here. We'll be right back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're opening here in the stock market, and we got the S&P is very, very close to the 382 retracement up here at the 1940 level. Now, if you have a bearish sentiment going for you today, then you want to be looking at that as a potential short sale up at that 1940 level. I wouldn't have to think you'd risk more than 5 points to see if you're right or not, but in bear markets, that's usually all you get is a 382 retracement. And remember, these last couple of days here have a positive bias based on the speed of the planets that we've seen from our good friend Shane Smolian. So we'll just watch it up here at this level of 1940 and see how the market handles it. Now, the bond market is in a different situation, and I believe this is where the real problem is going to lie, is going to be in the bond markets, your corporate bonds and in your junk bonds. Once those finally turn over, you're going to see a really massive bear market in bonds. And that leads you to the question of where do you put your money? And the answer is in the mattress, because cash can be king. It's been a long time. It's been over 32 years. 82. It's been 34 years since cash was king. In other words, you had money that you could buy things at a cheaper price than you could before. And with all the deflation that we have going on now, that could happen again. So we live in an area where these markets have extended themselves way beyond real because of the fact that quantitative easing came in to change a lot of the parameters that we had normally used, like money supply and common sense, and things like that. So, just keep those things in mind as you're watching this, because debt, when it finally does start to dissipate, doesn't leave many people alive, at least healthy, because it just literally destroys so much, because it gains so much on the way up and it destroys on the way down. And we haven't had that situation for many, many years. This is what cracked the market. And I know you're going to say this, well, it's different this time. Well, it certainly is. But back in the era of Andrew Jackson, back in 1835, that was the thing that caused the panic in 1837 that broke the U.S. Bank, which basically the U.S. Bank was the Federal Reserve. The Federal Reserve didn't become a bank until the Federal Reserve Act of 1913 from Jekyll's Island. And this is, that's still with us to this day, so we'll see what happens. But I believe that we are in a very strong secular bear market. All of the things that I looked at over the weekend, just absolutely amazing. This is not the fact that it's been the worst January start that we've had since 1932, but that's nearly the same thing. Now we are hearing my alert go off again, and we just made a 38% retracement of the last 5 days trading in the DAX, and I think I should put that up here to let you folks take a look at it. But first I have to turn off this little beeper, otherwise it's going to drive me nuts, and that's not an easy task. And the train to nuts is a very, very short drive for me. So let's just put this up and let you folks look at it, because that is exactly what we have going on now up here. Oh dear, it's the wrong chart. Good shot, Larry. Oh dear, what did I do wrong? Yep, nope, that's it. Why does it say that? It says DAX and it comes up S&P. Shut the front door and raise the rent. What did I do wrong here? Well, nothing much I can do. Okay, we'll put that S&P one up again just to let everybody see it, but I was sure I had the DAX in there, but being sure and being right are two different things. Okay, there's the 1940 level in the S&P. As you can see, that completes an ABCD level up into here, and that's what we'd be looking at. That pullback that we had last night and early this morning was a 786 retracement of the low we made yesterday. That's another thing that makes this this chart, very, 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 very important. So we'll see what happens with this. Now, it's interesting because the DAX index only beeped twice to tell us that that was the 382. So it's going to be very, very important to watch this level here in the S&P as we go through these charts. Now, I wanted to. I still think we got a chance in this oil. I'm going to put up the oil services chart here, because if you had to buy anything today and you had to put a gun to my head, which I don't particularly like, but at this level of around this 142 level in the oil services index, looks like it could be a very interesting thing, with a stop probably about $2 below that level, but that's right at the 786. And what's important about this is you'll notice that it hit the exact 61% retracement back in 2014 and 2015, and then had a 10% rally. And so these numbers on this OSX hold up, quite nicely. So, and we're right at this 786 now. So that's one of the things that I'm watching, along with the, the Canadian dollar. That's also one that has a strong reciprocal with the crude oil. In other words, when crude oil goes up, the Canadian dollar goes up with it, and vice versa. And so we got the Canadian at a very, very low level now. And as we've shown you today, we've completed the long-term patterns that were equal over 1972 through 1985 and through the present, that those moves have been pretty much spot on. They came in at 142.50 in the Canadian dollar versus the U.S. dollar. So we'll watch that. Well, by the way, I don't follow football very much, but I did watch the first half of the game in the national championship, and it was very good. Unfortunately, I couldn't stay up for the second half, but it was really an exciting game, which was fine. It was from our home there in Phoenix, Arizona, where the Arizona Cardinals play, and it was a beautiful, really a great game. So I was glad to see everybody had a lot of fun, but feel sorry for the team that loses. But for everybody that wins, there's got to be a loser. That's the bottom line of what we're watching at here. Okay, now I wanted to show you the long-term daily chart here on crude oil, because we came within less than $1 of the long-term 1.618 retracement of this. That came in at 29.63, and the low we had yesterday was at 30.50. So we were then about 80 cents of the long-term move, going back over almost, it was the past year, because last March, and we could get a rally equal to what we had in March, and that rally went from 40 to 60, and this one would go from 30 to 50. We could easily get a rally of $40 to $50 per barrel. not $40 a barrel, but get up to the $40 or $50 per, well, 40 is nothing, up to the $50 level in oil would not be unheard of. That's only, $20 from where we are now. And, oil has a tendency to be very, very active, especially when you have everybody on one side of the market like we have. Well, not everybody's on one side of the market, but I think the large traders are on the large side of the on the long side of the market, because they're the only ones that have those deep pockets to stay in and buy as markets go lower. Just like when markets go higher, they're the only ones, that's going up to make a situation of being a seller. 877-766.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and one of our friends sent us a German DAX chart, a daily going back to October, and as you can see, we completed a beautiful Gartley pattern, perfect ABCD format, coming in on last Friday. We had a double bottom down there on the, well, actually Monday, Tuesday, but you can see that we stopped right at the 786 level at 9,700. And now we've, on the shorter term that I just posted on the DAX, we did get up to that 10,091 level, which was a 382 of the smaller range that we have there. But if we look at the larger range, going back to where we were in December, that would take us up another 300 pips. That's why this level is so important in the DAX at 1091 or 10,091, and that's equivalent to 1940 in the S&P. And so far in the S&P, we got to 1940.25. That is held it. Now, I don't know if that's going to be the high of the day or not, but the thing is important because if it starts to weaken, that could set up an outside day, and then you could get a big reversal to the downside, and you certainly don't want to stand in front of that puppy if it happens. That's a really bad one to look at. It's already backed off about 6 points from that 1940 level, but that's still a little bit still early in the game. But it's something to pay attention to from a technical point of view, because we're in a really bad market, folks. You just look at the global markets. Look at anything. When you hear hoofbeats, think horses, not zebras. There's something else out there that we're not being told, and it's going to come to the forefront and tell us. And I believe it's going to be in the bond markets. Both junk bonds and corporate bonds and treasuries are going to take the brunt of this eventually, because that market is hundreds and hundreds of times bigger than the small stock markets that we follow, because the debt markets are so huge, and they've gotten unmanageable since quantitative easing. So we'll watch this very, very closely. That's one of the reasons why the market went up, is the fact that these companies were able to borrow money at zero and buy their own stock back. 877-927. More lobster, cracked crab, please. God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.